Hello, and welcome to another day of TA the Degen way. Just wanted to hop on and do a quick video on our latest trading plan for FET, or Fetch AI. And yes, you read the title right. Once again, we have daily bullish divergence showing up on our wave trend oscillators as price is reaching the bottom of its range. And I just want to do a quick breakdown of this trading idea that you can find on TradingView under the Ideas section by just searching for CryptoFile 622. And if you like the style of TA and would like to learn how to do these things yourself, you should join our free Discord group. There's a link in the description. And support us by pressing the like button or the subscribe button. Let's jump into this FET chart and look at what's going on here. I do have a write-up on it in here also. We'll just pop right into the regular chart. If you want to import this chart into your own TradingView, you may need premium, but you can go down to the share button on our ideas page and click the make it mine and import it into the editable portion of TradingView. But here's this chart. Why is there a bullish trading plan on the board for FET? Well, if you watched any of our videos on biggest bear market movers, some of the largest movers in the bear market, one of them was FET. So this is one that has had my attention. You can see we are putting in higher low, higher low, higher high, and hopefully we are about to put in a higher high once again. We've been in a clear downtrend since some of this upper price action up here. Just drawing that nice simple trend line down. But you can see that that price was moving down at a very fast rate and then now has been trading sideways. And if we split this range into two sections, we are currently trading in this bottom section. Here is your swing low from the upside, your swing high, swing low, and then this uptrend ended by putting in a lower high and a lower low. Lower high, excuse me, I've had a terrible cold. Lower low, lower high, lower low, higher high, hopeful, higher, low. Currently have two trading plans on this. One is to take an entry here if it allows, or if we happen to just crash on down or get stopped out in this area, I'll be looking to take a second entry attempt down in here. Well, why down here? Well, this is the bottom of the range, and if we are starting an uptrend with a series of higher highs and higher lows, we do have this one nasty wick down here on the daily, which is telling us as we came down to the bottom of the range, we got a bullish signal and wicked up, put in this high, which was a higher high, and now have retraced for a hopeful higher low. And how much of this trend sends our bullish pin bar at support? This was our clear support line. Price came and consolidated on it. It caught some traction, pulled back again, and was accepted into this range and put in a higher high for this hopeful higher low. We can see the price action is curving like this as it moves down to the key level. This was our last support area right here, and as price has pulled down into it, it has built up some curvature here. And what does this curvature tell us? It tells us that this downtrend is exhausting. It's getting slow. So we would expect this little mini downtrend to trend sideways and hopefully continue on to the upside. And if we look at how much of this trend with this big nasty wick has retraced, Here is our swing low and our swing high. It retraced about 50%. And if we were to throw on the 618 for the golden pocket, I mean, we are pretty much about right on the money. That is a sufficient pullback. Price has pulled back 50% of the way, and looking for a larger move to the upside. And for targets, we should always trade the range until it breaks, but there is a slightly more bullish target taking a measured move, pushing us up to 1.25 of the range above, hopefully to pull back, gain support by 3/4 of the range below, come back up to 1/4 and be accepted back into this upper price range. If that occurs, what should we be looking for? We should be looking for price to come up, retest the bottom of the range, come up 50%, come back, to 1/4 of the range, and move on up to 3/4, and hopefully up to the top. But our current trading plan, we're way down here. We're trading sideways in this range, and we have a bullish pin bar. This is our first pullback since our bullish signal at known support. So as such, we should be trading this range. And I've gone ahead and just used the Fibonacci retracement tool and adjusted the functions into quarters, so we can split this range up into 25% increments, as price tends to respect this very, very well. 80% of the time, if not more, price is ranging, whether it be in a tiny little range like this, a medium-sized range like this, or a more macro range like this. And in all seriousness, we will hopefully look back in the past and we will see this entire swing down as one large range. Matching this, here's this high, this low. This is a trading range. But, every macro range has many smaller ranges inside it. Not all ranges are equal. But we are at the bottom of a macro range. We have daily bullish divergence. We have a lower low on our price with curvature into key support. And we have a higher low on our momentum oscillator. This momentum oscillator, I'm using Market Liberator, but this is basically just your regular RSI. It's just 2 RSIs. And you can see that, price has pushed up off of this daily divergence. And for a swing trade, what we are looking for now is we are looking for price to make its first pullback and take some kind of an entry in this. Well, where did price consolidate? Look at this small range down here. We scroll over, we can get some levels, these close prices right here, these daily close, these lows right here. Price, we're looking for it to pull back and retest these lows at about 21 cents, maybe down to 20 cents or 20.05. And why that level? Well, if we break down, zoom into this chart a little bit more and see what's going on in this little chunk of price action down here. This is a range down here. It is a small local range, and that local range had clear resistance to it. Price came down, found support, made resistance at the previous support. It pulled back one more of these ranges, found support, has this nice wick there. Price pushed up, pulled back, bullish engulfing candle. Took the liquidity below the low, but it's sitting here pecking at this level saying, no, I don't want to go any lower. And what did you have here on your 4-hour? Bullish divergence. And as such, price rotated to the upside in a 1, 2, 3, 4 structure. And now we are looking for one more to, probably come up to this trend line, pull back, probably halfway, and we could take the bottom of this trend to wherever it peaks out. Let's say it peaks out up here, pull back into that golden pocket area, and bounce. So currently price is back to resistance here, and if we zoom in, our entry may be right where we're sitting right now. Look at what we got on the price. Here's our low of our current range. The only thing is, price did come down and retest this range. So now, we're looking at this high right here as being our last kind of support resistance area. And we got this low right here. This has been retested. This is clear support. We have a 1, 2, 3, just an ABC correction. I would be a little bit leery of this hourly coming up and doing this, falling down into our buy area, coming back up, and putting in a lower low with a measured move, bringing us back into this range. So what are we looking for some kind of an entry here? Is we're looking for price to come down into this area, this key level of support and resistance, which is arguably right where price is at now, or hopefully down here. You can see this lower range has a very nice support resistance flip. This is a swing in the market. It's a smaller swing, and it defines this range, and we can split this range right down the middle with our highs and our lows. So as price pulls back, we're looking for price to pull back to this support resistance flip, and we can probably raise this level ever so slightly, maybe right there or so, which would be as low as 20.59, which is why I've marked this window as 20.05 as 21 to 20.05. That's really anywhere inside this consolidation area, and that's if we even break down into it. Price has broken into the range above and is retesting the support resistance of it. What we would like to see is price to break a quarter of the way back into the range below, which would be about halfway across here, about right here, to this 2075, 2080 area, and push back up excuse me, above this support resistance flip here at about 2110, and regain support and get a bullish candle on this hourly or less. So this is the entry that we're looking at. And for targets, if we pop back out to our daily, this is a swing trade, and I want to point out some more confluence for this, but we got our daily divergence at the bottom of the range. We should be targeting we're in the upper or the lower 25% of the range. We should be looking for long positions, regardless of our personal sentiment as to whether or not the market's going up or down, because what is most likely to happen at the bottom of a range is price is likely to bounce, and at least retrace a quarter to 50% of the range. But being we've got daily divergence, we have a larger swing in the market, which seems to be exhausting and hopefully rotating to the upside. In all seriousness, we should be hopeful to be getting back into this macro range up here. And if we look at this, we got our bullish pin bar on the daily. There's our clear entry signal. Which means we could come all the way back down here, which is why I've got a buy window if the first fails. I'm open to price coming up to this trend line here and rejecting from its current price. And if we follow the curvature of the price action, that would be giving us a low somewhere right in here. So we could sit here and we could bounce around for a while just the same. before price actually breaks out, but I want to look at every other time that we came down to the bottom of this range and then price moved to the top of the range. So this is the top of the range at about 29.75. We've split this range into quarters. So let's go to 25% of the range. What do we have? Support and our current resistance level right at 25%. Here it was resistance, here it was support, here it was resistance. Let's go to 50%. What do we have? Resistance, support, resistance, support on these little ranges. And there was some support inside here, but not very much. Let's go to 75%. What do we have? Resistance, resistance. So if we're going to continue this uptrend, here's our liquidity grab. It's your spring if you're trading a Wyckoff method. Price came down to a key level, found support, and the trend is exhausting, so it's not just going straight down, it's losing momentum and hopefully going to curl to the upside, but first it's going to turn sideways as it has. Here is the center of it. Price came down and confirmed that we've been accepted here for now. So really anywhere, a person would want to buy the first pullback after this. This would have been the ideal entry. Would be to take this first pullback on a smaller time frame, like an hourly or less. But now on the daily, on a more macro wise, we're looking for our first pullback just the same, which is where we find ourselves now. Price has pumped off that daily, or off of the spring here, this big wick, the confirmation of this macro level, wanting to hold and push up. It put in a higher high after that, giving us further confirmation, and now is hopefully putting in this lower low. We don't know that this low is going to hold, but this is our previous support here. Here it was resistance, here it was support, and now it was support once again. And what did we get when price came down to the key level? We got a bullish engulfing candle. So we're looking for price to come up to the next support resistance area right here. This was support. Price wicked below it with the pin bar, pushed up. Now price came up and hit this area and has pulled back from it. Where would we expect it to pull back to? Our last support resistance flip, which is down in this area of about 2075, anywhere from 21 to 2005. So we're looking for this first pullback in our macro hopeful swing to the upside, but being conservative and not greedy, trading the range that we're in now will most likely be sufficient, and a person can always leave a moon bag to ride, and hopefully we make it up to this 1 1/4 even, which is our measured move, and find support either at the top or the bottom of our upper range and the top of the range we're in now, or even better, pull back to this 2685 area and go. So how do we have this structured out? Nobody can predict price. All we can do is we can use high probability modeling based off of how price acts and reacts in a general fashion, things that we know about just market theory in general. We're looking for, here's our bullish signal at a key level. So we're looking for this macro swing to reverse, and we got a higher high after it. We have this clear downtrend, and hopefully we're going to break it here. Maybe we pump up to this half the range, this 2420 area, 25 area, and then pull back and retest it. Or maybe we pull up halfway in between a quarter and 50%, to this resistance right here. And, this would be a minor resistance level. Pull back and retest this break of a massive macro downtrend, which would be a clear indication that, if you're a trend line trader, this would be your entry. Let it pull back, but I hate to say it, when price makes it to 50% of the way, your entry will probably get stopped out by a, price will probably do something like this. Here is your trend line trader's entry at this resistance here. You'll have your A, B, C, D, or your 1, 2, 3, 4, 5. Well, what's going to happen there? So if your entry is right here, prices for this will be a new trend in the market that will retrace probably 50% of the way, stop you out, and then 1, 2, 3, 4, 5 which is why I am looking for better entries than trendline trading. You must understand that 95% of people are not successful trading, so you cannot trade in the same fashion that 95% of people do. So the way that this should be traded, to not trade the same way as everybody else is to get a better entry than that and take profit. So as price pulls back here, we're looking for a bullish candle on a smaller time frame. So anywhere in this little window here, we're looking for good, clear, solid signal. So the daily, we've got our daily divergence, but we've already seen a push up. So now we're looking for when will this little pullback end. And on our more macro scale, we've already got our first push up. We're looking for when will this first pullback end. I'm saying it has ended right here, most likely, and now we're looking for an entry into it, meaning we've got some confirmation signals, like once again we got bullish divergence on the daily and our engulfing candle. So this pullback is probably over, so we are looking to enter anywhere from this first support resistance flip down to our low, looking for a bullish signal on a smaller time frame. And if we go down to our 4 hour, our 4 hour is pretty maxed out, so we're looking for this little swing right here. When will this little retrace be exhausted? And we want to take an entry when this trend is exhausted, that's pulling down right now, at the first bullish signal on a smaller time frame, with a stop loss right below the candle that says it is safe to enter and that this little swing is over. We're confident this swing is over. It's got curvature that is, when time and price are square, the trend changes because the trend has lost momentum and is flattened out. So, as such, we're looking for confirmation of it. We got it. It was our bullish engulfing daily candle. And then now we're looking for the first pullback. Same principles apply. We want to find the bottom of this first pullback and look for the first entry, and look for an entry signal at this key support resistance level. And if we go down to our 4 hour, there we go. You can see we've got a nice engulfing candle to the downside. What did we get on our 4 hour to tell us that this push up was over? Well, we got this nice wick down. Where at key support resistance right here. Price came up into that area, wick down, came back up to it again, wick down, put in lower highs. You got this engulfing candle to the downside. Being that price is trending to the upside, I am not interested in shorting this because we don't know exactly at what price it is going to reverse. So right now price has pulled down to the bottom of this tiny little range here and hasn't made it into our buy area. So as price pushes up, it would be very easy to be greedy and FOMO into this. But what do we have here? There's support resistance right here. So price was trading in this little range up here. And if we come down to the hourly, we will see that range well defined, I'm sure. And we do. So if we look at this, here is our support and resistance for this upper price action here. This here likely will push up, and what happens when price hits resistance? We should, push up to it and hopefully reject, and we can take this upper range and assume that price will come down one more section. Well, where? So if we consider that markets are symmetrical, which is why your fib works, your golden pocket works, because markets move in ranges, and ranges can be clearly split up into equal increments, pretty much down to the eighth, and you will find your significant levels 90% of the time at those locations. So price broke into the range above and said no. Nice big engulfing candle to the downside at a key level. What was your signal that this push up was over? Well, your oscillator would have been probably showing bearish divergence at this top. What do you know? Bearish divergence. Scissors top with an engulfing candle. Look at all these highs right here. So, to me, our clear support resistance level is pretty much about right here. And let's take this and let's consider this to be a small range where price was trading in it. And then now let's take this and let's slide it on down. So right now, price is about halfway down. Should come up and find resistance, come down, find support, possibly come up and hit some resistance, and hopefully move on down. And now if we take this whole entire range and we're going to copy and paste this and move it to the downside. Oh, it just so happens to match our support here, and get right down to our support resistance area, front running it ever so slightly. There's this tiny little range right here that price could still break into. But so we're looking for price to come down into this box. We don't want to just enter in here because we don't know that price will move on. If a person was running like a grid bot or something, you could set a grid of limit orders down in here with your stop loss below this bullish engulfing candle. This here would be the invalidation point without price action here. It is far better to let price pull back here and wait for, your bullish or bearish signal. Look for the bullish divergence on your hourly oscillator or lower, and look for that bullish engulfing candle or that big wick, and the stop loss goes below that entry signal. That is just classic straight up 101 range trading. And no matter what kind of trading you want to do, learning to trade ranges and how price works is extremely valuable to investing, swing trading, or trend line trading. And for scalping, it is a 1000% necessary skill to develop. And this is where demo mode comes in extremely helpful, where you can go on the small time frames and not consider whether or not your trades are profitable or not profitable, but just considering, can I enter this trade and not get stopped? Can I accurately follow the ebb and flow of the market by using higher time frames and large ranges when price is in the bottom of the large macro range, looking for it to move halfway or a quarter across the range and looking for the divergences on the smaller time frames, and kind of mapping out these swings as we have thus far. So right now we're sitting here on top of our resistance level. Price could just hold this, I would like to see it come back down here and quickly come back out and reclaim this as support, giving us a good solid confirmation. And at that point, a person could move their stop loss to entry if they wanted to. And let's zoom back out to the weekly. So we've talked about our entry, what we're looking for a signal, we're looking for this trend, this downtrend that we are in right now. You could even draw a trend line here and wait for the, what is going to be your entry signal. I mean, for me, it's bullish divergence and candlestick patterns on smaller time frames. If I'm seeing it on the hourly getting close, and I'm seeing it on like the 30-minute, or I like to use the 24-minute and the 12-minute, so I'm front running the 15-minute and the 30-minute ever so slightly. But if I see it getting close on the hourly, the 4 hours down pretty low, I will jump down to the minute, and I will look for that, not just a bullish candle. I'll look for a little bullish range. Price came down, sat there, said no, pops up above that little range, pulls back and starts trading on top of it, and then as soon as I get a bullish candle in that little range that formed above that lower one, well, that is my signal, and my stop loss goes below it. Or looking for a break of trend, pull back and move on. I mean, it's pretty much the same thing. So that's what we're looking for, and plus we're looking at the curvature of this downtrend. When will this little downtrend be exhausted? That is our entry point. And right now we're kind of forming a little bit of a wedge pattern. What is the target of this wedge? Well, down here at our support resistance, right here, just inside our box, which is also our last real support resistance area here. Price pulled back, got this nice big bullish engulfing candle, and price moved on to the upside. Price pulled back, nice big engulfing candle, moved on to the upside. Price moved up, got this nice big bearish engulfing candle, and moved on down to the downside. But we're only looking for these kinds of signals at key support and resistance areas. And the larger it is, the more of an effect it's going to have. So now we're just following this general market theory of how, price ebbs and flows through the market. And this is, this market philosophy has existed for a millennia. A long time ago, big traders like Gann and others, they called it the law of vibration. How is price ebbing and flowing through the market? Or like right here, you can see these two lows on the hourly are coming down right down to where we're looking for our entry. Oh, we got an alert. So let's talk targets. Looking for, to get to the top of the range. So, how could a person actually trade this trading plan? Well, first you could join our free Discord, where I will be talking about it as I'm moving through it myself. I don't consider this financial advice, but rather market analysis advice and how I'm using it in my personal life. Do I have confidence in this personally? I do. When I see the things that I'm looking for in the places that they should arrive, that is what is going to occur. It is really the only way that it works. So let's pop back to that daily, and let's look at some of these key areas. We already discussed why they're there. It's because we've taken our trade. We're just trading the range, but we're trading the range when we know our environment, and our environment says that we should be looking to break into the upper range. The big macro trend coming down has given us bullish signals. It's put in a higher high. We're looking for this higher low. Should be putting in a higher high, which is the top of the range. So if we split this into 25% increments, which is our key support and resistance levels, we already looked at that. Here's a range in between these quarters of the range. Right now we are in the bottom 25%. We should be looking to sell in the upper 25%, but anything could happen. This thing could go to zero any day of the week. Crypto could become completely illegal. There could be a solar flare or an EMP or whatever, which obviously your money's going to be worthless anyways. It's wise to take your profit along the way, or trade the range. So our next stop, we would expect price, this is our current high, fade this breakout. Price goes to break out. It says no. Pulls back. And is that not what you would expect as a trend line trader? Price to break trend, pull back, and retest it. Well, what's happening here? These highs are running into this trend line. Price goes to break out. It pulls back, but doesn't pull back to the bottom of the range. It pulls back only 50% of the way or 25% of the way. And then you get a bullish engulfing candle and bullish divergence, just bullish signals. And it, be a good sufficient retest of this macro break of trend. Well, then you should be expecting to move to the next highs, which is right here, and get a pullback with a continuation up to your next real highs. This is just a minor high inside here. It's just, here we got resistance, resistance, resistance. It was support here, it was resistance here, it was support here, resistance here. This is key here. Plus, it's 50% of the range. And if we were to take just this swing and say, okay, well, how much of if we get to 50% of the range, how much of this swing has retraced? At 50% of the range, it is exactly 61.8. This is what Gann and others meant by the law of vibration. It's just how price is acting and reacting inside these ranges, and just, that is the only tool that you really have, and based on probability of past price action. The Bible says what has been shall be, and that there's nothing new under the sun. Action, reaction, cause and effect. Well, why did it happen before? Because of the actions that occurred before created that reaction. So when you're seeing the same actions, you should be expecting the same reactions, which is the top of the range. So here, if we break out, a person could secure some profit and definitely de-risk, stop loss to entry. Now you're just on house money. You're looking to lose nothing. As soon as price really breaks above this range right here, there's no point in not being stop loss to entry. Take some profit, let price pull back, and on the first bullish signal to the upside again, that we are going to continue on to TP2 here, you can always add those funds back in, or just leave the stop loss at entry and just say, I'm going to add more to the trade. I'm going to let price come up, pull back bullishly. I'm going to add more to the trade. Let price come up, pull back bullish, and get a bullish signal. Add to the trade. Let price pull back, add to the trade. Or just add to the bigger ones. I expect by 50% we should be retracing all the way back down here. Price is right here, and the mini swing ends right here. It should be pulling back 50% to 61.8 of the way, which is probably either, right in here somewhere. Add to it, or take profit, buy back in, or it comes up here and pulls back to retest. The same thing, but taking profit along the way. Or how about this? Price comes up here, you just raise your stop loss. Try not to get stopped out and keeping it a fair distance away, but locking in some of that profit with the expectation that price will continue to rise to the upside until we get to the upper portion of the range, but hopeful to break 25% of the way into our upper range and pull back to looking for bullish signals at the bottom of that range and the top of this. And if it fails and falls through, definitely looking for it to catch here at our, clear. If price comes up here and rejects and pulls back and then breaks through, what would you expect when price pulls back? Well, then now where is your support resistance? Look at these daily close right here, and look at this daily high right here. So we would be looking for price to pull back into this little window, maybe 25% of the way back into this range, or even better, only half of it. But learning to think in equal increments and fractions of how the chart is actually presenting itself is very functionable. You can see this macro trend is getting nice curvature to it. But that is our current trading plan on FET fetch. I mean, the full thesis, what I'm looking for, and if price pulls back bullishly into this 21 or 2005 area and it fails, I will be looking for a reattempt to retrace this entire range from down here at our next lows. We really only have 2 more floors. We think of this as a house. We really only have 2 more floors left. We're testing this one right here. So what's below this? Well, this here is support. It's resistance on that one candle, but it's support. It's support. So we got a level right in here. We got a level right in here. And then obviously we got our big nasty wick all the way down here. The ideal buy price would have been way down here, but now if we follow this right here, you can see that we actually have an uptrend. Wonder if we look at the close prices, what that trend looks like. So, this does give us room to kind of come on down maybe one more time and close at the bottom of that range before we pump. I'd be okay with that. You can see that this nice clear trend line coming down, nice clear trend line. Maybe price sits here and bobbles around. Here we've came back up and retested that resistance, so we should be looking to pull back and retest this right here, just like we're saying. And that's what I mean. We need the bullish signal here that doesn't reject again right here. If price pulls back and gives the bullish signal, you're entering as close to the bottom as possible, but need it to break above this right here and retest it and bounce bullishly again. If it comes up here and you get a big bearish signal, well, price is probably going to come back down to here or here. So that's all I got for you today. If you like this style of TA, or if you want to learn how to do these things, come on into our Discord and learn. There's no cost. Just looking for other participants that have interest in trading and the crypto market. But until next time, trade well.